Hey guys, hope you're doing well out there. It's time to take a look at one of my personal favorite companies and businesses, that is Visa Incorporated, ticker symbol V. They just reported their Q2 results after the bell, and to no one's surprise, these results continue to be spectacular over at Visa as they consistently come in with beats on both the top and bottom line. They also provided guidance for the upcoming fiscal Q3 and the full year, so we'll take a look at that. Basically, guidance comes in to be consistent with what Wall Street is estimating over the upcoming year. And then we'll also jump into the free cash flows for Visa. This is basically the slide that sums it all. It basically tells you why this company is always a buy, and it basically puts that onto one page for you. We'll also jump into the notable items. That is a small change in Visa's business model that might actually affect their economics moving forward. So we'll look into that as that was announced in this most recent quarter. And then as always, we'll jump into the technicals for this one. And it's basically, like I said, always been a buy, but we will highlight some levels where I think you can look to step into shares of Visa if you haven't already, and where you can look to acquire more. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of the payment processing giant are up just 5% year to date, but adding to those gains in the after hours as they're up nearly 3%. After hours up to close to $282 a share. You get a small dividend with Visa that is consistently growing, but still is small, close to 0.76%. And with a massive market cap, you are still buying into an absolutely juggernaut of a company. Now, with revenues growing 10% still, whenever you think that Visa has fully tapped out on its market potential and growth, they just continue to grow more as revenues came in higher at 10% year over year, up to $8.8 billion. That also beat estimates on Wall Street by roughly $180 million. And then on your non-GAAP EPS grew at close to 20%, with estimates on Wall Street were closer to 12%, as non-GAAP EPS came in at $2.51, again, beating estimates by 8 cents. In terms of guidance, we'll jump into the most recent Q2 in just a second, but in terms of Q3 guidance, Visa guiding for low double-digit revenue growth and then high end of low double-digit EPS growth, otherwise known as 14%. I don't know why they say high end of low double-digit, but we see for the upcoming quarter, Wall Street estimating right around 10.5% growth on that, revenues up to close to $9 billion, and then EPS growth close to, again, 14%. So really in line with what Visa is guiding in terms of their financial outlook as well. In terms of operating expenses growth, those continuing to chug right along in the low teens and low double digits for the full year. So really nothing out of the ordinary from this most recent Q2 and from the guidance for Visa. As we see, they came in with that double beat and then guidance basically in line with what Wall Street was expecting. Now, revenues, like we said, up 10% year over year, but what's most impressive over at Visa is how well these revenues translate to profitability. So you see revenues up 10%, but your GAAP net income also up 10%. That basically shows you the economics of this business are phenomenal. Whenever they're able to increase their revenues, almost dollar for dollar, not quite dollar for dollar, but very close, flow right down to their GAAP net income line. And that is an absolutely beautiful business. On top of that, you have EPS growing at 12%. You see slightly faster than their revenues and net income as they have that large buyback in place, and they can continue to lower their share count, bolstering up their EPS. And then same thing on a non-GAAP net income and non-GAAP EPS figure, rising nearly 20% year over year. So the economics of Visa continue to be phenomenal. Basically, all of your top line revenue growth and more flows right down to your bottom line. In terms of their key business drivers, you see payments volume came up 8% year over year. That's always good to see. You want to see more payments volume. Consider that inflation still sticking around, call it 3%. So not quite 8% organic growth, as you have just the average cost of goods and services rising 3% as well, but still 8% growth, still showing organic revenue growth in terms of payments volume. On top of that, you have cross-border, excluding intra-Europe travel, up nearly 16%, and then total cross-border volume also up 16%. So that's still good to see. This is traditionally a pretty slow quarter for Visa, their Q2, not really the holiday time period, also not the summer time period. And so cross-border travel does tend to come in a bit slower, but still growing at 16%, quite impressive considering this was Visa's slower Q2. Now, in terms of free cash flow, this is the slide that gets me most excited and really basically tells you why you should own Visa. If you just had to look at this one slide, this pretty much sums it up. So we see cash and cash equivalents plus investment securities sitting at roughly, call it $21 billion as of March 31st. So keep that in mind. They're sitting on close to $21 billion of just liquid investments. And still, this is a nearly $550 billion market cap. So $21 billion, not something to sneeze at even for a Visa. Now, when we take a look at their free cash flows for this most recent quarter, we see operating cash flows came in at $4.5 billion. And then you take away your capex of right around $280 million, and you get free cash flows north of $4.2 billion. Not for 12 months, that is for 3 months. For this most recent quarter, that is historically a slower quarter for Visa. So you see they printed nearly $4.3 billion of free cash flow in 3 months. You take that over the past 6 months or the past 2 quarters, and they're printing close to $7.6 billion of free cash flow. That is an absolutely staggering figure, just one that it's hard to wrap your head around how much free cash flow this company prints in the span of just 2 quarters. Now, on top of that, what do they do with all this free cash flow? Simply because they don't have a ton of capex. Look, this is not a company that has tons of property, plant, and equipment. They don't have a ton of expenses to put this free cash flow to use. And so what they do is they bolster a bit onto their cash piles. We see they have $21 billion in cash and cash equivalents, but mostly they're repurchasing their common stock at the tune of $6 billion over the past 2 quarters, and then also paying close to $2 billion in dividends. And so this is a top 5 shareholder friendly company on Wall Street. In fact, it might be the #1 most shareholder friendly company, as you're returning more than 100% of your free cash flow over the last 6 months, basically over the full year, to your shareholders in the form of stock buybacks or dividends. That is an absolutely beautiful thing to see, not something many companies can do, where they're returning more than their full year free cash flow, continuing to invest in their business, but also continuing to add to their cash pile. That is an absolutely beautiful business model. Something I really love about Visa is the fact that you basically always get 100% of that free cash flow back towards you. Now, one thing that did get changed in this most recent quarter was the economics of Visa's business model. So on March 26th, they agreed to a landmark settlement. I believe the settlement was opened back in 2003, so nearly a 20-year lawsuit, that they're lowering their credit card interchange rates. And if you don't know, interchange rates is basically the way Visa tends to make money, and even MasterCard, that is the way that their business works and they make money. And so anytime you have a transaction at a merchant, the price of that product, a little bit off the top, gets shaved off to your credit card issuer like a MasterCard or a Visa. And so previously that fee was close to 1.4% on average for a Visa credit card, and that will now be lowered down to 0.95%, so less than a percent for the interchange fees for in-store transactions. Now keep in mind, this 0.95%, not all of it goes to Visa. In fact, most of it goes to the issuing bank. That's the bank that you as a consumer likely bank with. And then the remaining, let's say 20%, is split between Visa or the payment processor and then the acquiring bank, otherwise known as the merchant's bank. And so even this 9.95%, Visa doesn't actually see all of it. They might just see, let's say 0.1 or 0.2% of this. But consider the fact that you have trillions and absolutely trillions of dollars in circulation processing through these Visa cards. Even that, just even the 0.2% being shaved off the top, is a tremendous business model. Now, this fee is coming down, and so that will absolutely affect the economics of Visa. They'll simply be making less money per transaction, which does hurt their growth moving forward. But still, accounting for that, this company expected to grow their bottom line EPS still in the low double digits for basically the foreseeable future. And then same thing on their revenues, expected to grow in that 9 to 11%, call it through to 2030. And really, that's where these lower interchange fees have been negotiated up to close to 2030. And so maybe at that point, they'll once again be renegotiated, likely smaller businesses feeling the impact of these more so than larger ones. And that is 90% of Visa's US merchants being those small businesses. So for those small businesses, this is actually a good thing, considering that they'll likely continue to be able to use Visa as their payment processor. And also, in my opinion, likely a good thing for the consumer, as a lot of these interchange fees are often passed on to the consumer, and those fees being lowered is probably a good thing for you if you do tend to use a Visa or MasterCard. Now, moving on to the technicals, in terms of a stock chart, basically this company was locked in a pattern of higher highs and higher lows. Back in December, you had a breakout to the top end, closer to $290 a share, and then did get sold off back down to 270s. In the after hours, we are seeing this one come back up closer to 280s, and likely, in my opinion, will continue on this uptrend. You can likely say this will make a steeper uptrend, as we see it did get bounced off the top end of this channel, closer to $270 a share. Your next level of resistance, probably sitting closer to 290, is that is your close to all-time highs, I believe. Yeah, in fact, that is your all-time highs at $290 a share. Probably will meet some level of resistance there. But in my opinion, this company is chugging right along, really no red flags and nothing to worry about. This is one of those sleep easy at night stocks that you can continue to buy and hold. And so anytime basically you have a major dip or major pullback in Visa, like you just saw from 290 all the way down to 270, that was a pullback you likely could have stepped into. But if you have no position in Visa, certainly at this point, opening a position, a very small position, wouldn't be the worst thing. I think this company, from a valuation perspective, still not trading overly expensive. We can take a look at its forward price to earnings multiple, closer to a 27 times. And that's for the fiscal year ending in September. So actually, if you annualize this, probably closer to a 26, 25 times on a forward price to earnings. Certainly not expensive. Not the best deal, in my opinion, but for a company like Visa, absolutely not expensive, one that you can actually step into at this point. You still have room for the upside within this channel, and then if you have a major pullback further back into this channel, call it 260, 250, I think that's where you can add more shares for this company. One that you can consistently buy and hold. You're buying and holding for that dividend growth, and then on top of that, for that consistent free cash flow and share repurchase program. This company still has another, I think $24 billion in terms of a share buyback remaining that they'll likely continue to exercise. That was my take on shares of Visa. Nothing out of the ordinary, but that's honestly what we always expect with this company, to chug right along and post phenomenal revenues, earnings, and free cash flows. Let me know your thoughts on this one in the comment section below, whether you're coming in here and picking up shares of Visa at close to $280 a share. As always, thanks so much for listening, and I'll catch you guys in the next video.